All right, good afternoon. Thanks everyone for joining us today. We have an update with Shawn Khunkhun, CEO of Dolly Varden, and Rick Van Nieuwenhuyse, CEO of Contango. As I'm sure everyone knows, they recently announced a merger of equals between their two companies. So we're going to today do a bit of a different session. I think we're going to stick purely to Q&A. So if anyone has any questions, feel free to put them in the Q&A box at the bottom. I don't believe that we will work off of presentations. Both companies have the merger presentation on their website. So if you'd like to take a look, you can find it there. And within that, you'll find forward-looking statements. And although we're not using a presentation, this session will contain forward-looking statements. So make sure you're aware of those. And with that out of the way, I'd like to introduce Shawn and Rick. Thanks, guys, for joining us today.
Oh, pleasure to be on, Deborah. My first time here, so I'll follow your
Yeah,
lead.
we just met for the first time ever. Shawn has been kind enough to support a previous charity fundraiser that we did. I think it was the summer of 2023 for fire relief funds. This one, as I'm sure everyone knows, is for food banks. So I would be curious actually which food banks you guys have decided to support.
Actually, you know what? To be completely honest, I hadn't even thought about it. I thought maybe it was something that you were going to decide, but for me, I think we support the local food bank here at Vancouver. Yeah, and again, you know what? Hats off to you, Deborah, to do this. I think you've got 25 companies. I think you've raised like $50,000 for this cause. So, it's important this time of year to do that all throughout the year, and so both companies, anytime you've got a cause that you want to highlight and support, we'd love to consider supporting that.
Well,
Yeah,
thanks.
it's
I
a great
appreciate.
it's a great cause. So we support the local food bank here in Fairbanks, but happy to support the food bank in Vancouver as well.
Awesome. Well, also thanks for arranging the merger in time for me to talk to you about it. Um, so yeah, I think since we're going to do Q&A for the audience's benefit, so we can stay on topic, I think we're going to start with questions about the merger and then questions for questions for Contango and then questions for Dolly Varden. So if everyone could try and keep their questions sequentially so we're not jumping around, that'd be helpful. But if not, I'll just go with the flow. So I guess the first question that I had was, so this merger of equals brings together advanced exploration and near-term development with current production. What specific synergies in capital allocation and project sequencing are you expecting to unlock immediately?
Do you want me to take that?
Yeah, Rick, why don't you start with that one?
One of the beauties of this merger is, we're putting two companies together that are already fairly well financed. And so we don't need to raise money to execute the plan. And so we're generating cash flow at Manh Choh. We're generating on average about $100 million a year. It's a little lower in 2026 on average, but higher in 27, 28. So we'll put the two companies together, subject to the shareholder vote. We expect that to be in March. We'll have over $100 million in the bank, and we'll be generating $100 million of free cash flow. And the plan, which is financed, and we have the teams to do this, is to get Lucky Shot into production. It'll take about 2 years. That'll add, when it's up and running at full scale, it'll be about 50,000 ounces of additional production. We'll probably start out at 30 and ramp up 30, 40, 50. And that'll generate at a $3,500 gold price. We expect that to generate about a $2,000 margin per ounce. So that's another additional $100 million of cash flow. 2 years and a $50 million investment. This is a mine that's already in production. Already permitted, and so that's why it can get fairly quick into production. And again, we're using our direct shipping ore model where we're basically putting rocks in a box and sending them to a processing facility. We can talk more details about that. And then next in line are Johnson Tract and then the Dolly Varden assets, which that's, in my mind, that's the real synergy between the two companies. Is those deposits are both high precious metals, gold and silver, with base metals, copper, lead, and zinc. And they need to go to the same processing facility, same type of processing facility that can handle sulfide ores, producing copper, zinc, and precious metal concentrates. And so that's actually how Shawn and I got together on this transaction. Was we were both looking for opportunities to process our ores, locations to process our ores, without having to build a new one ourselves. And so rather than compete against each other, we decided to join forces. So that's there's more work to do on that, and I'm sure we'll be reporting and updating you as the time goes on here. But there's a lot of news flow coming out of this because we have production, we have advanced exploration at Lucky Shot, Johnson Tract, and lots more drilling to do. Actually, lots more drilling to report on from Kitsault, but also lots more drilling to do next year at Kitsault. So there'll be a tremendous amount of news flow, tremendous amount of catalysts. The market loves news, and the market loves. There's nothing better than the news than reporting high grade results, which both Johnson Tract and Kitsault projects have a habit of doing. And Lucky Shot fits right in with that because our resource grade there is about 14.5 grams. So that's lots of catalysts, lots of work to do, but we have the team and we have the dollars to do it.
Deborah, can I add just something to that point?
No, of course you can.
So you referenced a merger deck that's on both companies' websites. There's a slide in the deck, slide 9. And one of the questions that we've had was, how do you sequence? You've got, this pipeline of projects, how are you going to approach it? Slide 9 walks you through it. I've always wanted to be a part of a company that had cash flow, that had operations, that had the development pipeline, that had the growth. And I think through that sequencing, where you have $100 million in the bank, you've got $100 million of free cash flow, you've got a deposit that historically produced about 250,000 ounces at 40 grams per ton in Lucky Shot. And the same model of, as Rick says, put rocks in a box, ship them to Fort Knox. Having high grades that you can move into production quickly. $50 million investment, 2 years, it's producing. And then we could do the work at Johnson Tract, which is a special ore body. You've got a 1 million ounce, 10 gram deposit that's got more exploration potential. And then you've got the growth engine in the Kitsault Valley, where already you've got 65 million ounces of high grade silver and 1 million ounces of gold. We've got a 43-101 that's coming that we think is going to take the 64 to 100 million. So we got the silver growth. And to any of my shareholders that were saying, look, we bought Dolly because of the silver, and now you're getting into gold. We picked this moment at record high silver prices on, not the eve, but, close to the eve of a new 43-101. It'll be out in the first half of 2026, where we are guiding a 50% increase to the number of silver ounces. And these are high quality ounces. And so, and as Rick said, and I like that, Rick, if you can't beat them, join them. And so that's what we both have done here. And the processing facilities, like, when I look out into the future, like what's our vision? Our vision is, we want to be a dominant player, but we want to stay consistent with grade and safe location. Really, when you look at the North American landscape for precious metals production, you've got Hecla at $10 billion. And now with the silver and the gold that Contango Silver and Gold is going to bring, you bring a new entry into that high grade silver gold producer space. And so for investors who care about jurisdiction, care about grade, you can buy Hecla at 10 billion, or you can buy Contango Silver and Gold at $1 billion.
It also gets you out of the Lassonde curve traps, right? When you have that many assets and along different stages. And for you, Shawn, it gets you into production, which we've seen has worked really well for a lot of companies in terms of getting re-rated. I think it's a really great strategy. I think it's exciting to have that many projects in the development pipeline.
You mentioned the Lassonde curve, Devin. That's it's a reality. And when Pierre Lassonde drew the curve in the 80s, that valley of death used to last, 2, 3, 4 years, depending on project and location specifics. But today, that valley of death, it takes a lot longer to permit things. It takes a lot longer to execute. Everybody wants everything de-risked to a much higher degree than in the 80s. And so the valley of death is, 10 years, 15 years. I mean, I started NovaGold over 25 years ago. We find what is the same deposit today. It's not any bigger. The gold price is 10 times what it was when we found the deposit, because we found it when gold was 400. But that project is still not permitted. That's a $6 billion company today. But the resource is the same, but it's a real challenge to get, especially big projects that need lots of other infrastructure support through the permitting process, and not to mention the billions and billions of dollars of capital needed to actually execute and build the thing. Lots of risk still associated with that, and that's one of the reasons we like our DSO model. Is we shorten the timeline for permitting, because you're not permitting a whole lot of things. You're permitting basically a quarry operation, either an underground quarry or an open pit quarry, but it's basically moving rocks. And you're reducing your capital exposure, because you're not building a mill and a tailings facility and a power plant to run all that. You still need power, but it's a modest amount of power, again, to run a quarry operation. So yeah, we really like this DSO model. It's working well for us.
And Deborah, for me, this is when the light bulb went off, because I was looking at Dolly's project in the Golden Triangle. And if I went down the traditional path of permitting, huge capex, huge timeline, I'm maybe aggressively we're 7 years out from going the traditional path. But studying Contango and seeing what they've been able to accomplish in a 2 to 3 year time period, there's another way, this DSO model. And so that's, for me, was we could grow up faster, and through the existing cash flow, we're financed. Now we're financed, and we're going to sequence it all. And where it all goes was a phenomenal 5 year plan that the Contango shareholders had, a path to 200,000 ounces of gold production through the existing 3 projects. What Dolly Varden's project does to that 5 year plan is extends it over 2 decades. It's now a 20-year plan. And when Kitsault comes online, that's 5-6 million ounces of silver equivalent production, all in the same neighborhood, all with high grade. And so for us, it's a novel way to approach. And that's another differentiator. We're not your traditional, permit it, build it. We're looking, and there's multiple underutilized idle processing facilities in the neighborhood that, I think we have ambitions to own.
Yeah, like with a bigger presence in the market, like would the combined company potentially look at building a central mill or acquiring one? Like, how do you think about that?
Acquiring, definitely. Building, no. At least not in the immediate future. As Shawn mentioned, there's a couple that are sitting idle. So the luxury that grade gives you is the ability to transport your ore to an existing facility. I mean, literally, if you've got 10-gram material, there are a couple of trading companies out there that'll buy your material and send it over to Taiwan or send it down to Mexico for processing. So now you've got to have grade, and not a lot of projects out there. If you look at the 2,000 or 3,000 junior companies that are out there exploring and developing resources, the lion's share of them are at a gram, and if they're over a gram, they refer to it as high grade. That's a definite misnomer. 10 grams is high grade, and that's what's so unusual about Manh Choh. It's an 8 gram per ton open pit gold mine. I think it's the highest grade open pit gold mine in the world. So you got to start out with grade, and if you don't have that, then the DSO model, if you've got a gram, you're lucky if you can get it to the edge of the pit. If you've got a high strip ratio in 1 gram, that's a marginal ore body. So yeah, you got to have grade and you got to be close to infrastructure, and the water is the best infrastructure in the world because barging and shipping are the cheapest forms of transport in the world. So
Deborah, you said a word that I just want to run with. You said you used the word enhanced. And, one thing I just want to highlight here is, not only do we have an enhanced company that with assets and mineral inventory, but we also have an enhanced capital markets presence. So, the trading liquidity. And the one thing I want to highlight, because this isn't well known and that we haven't really, you know, I don't think we've nailed this point to any investor, existing or new. So we're at the start of what looks like a new bull market in precious metals. Silver's breaking out, gold's breaking out. The combined pro forma company is going to have 31 million shares out, 31 million shares. Half of those shares are held by what I would describe as long-term oriented strategic investors, whether they're corporates, whether they're individuals like Eric Sprott. And so really you got 15 million shares in the hands of the public. That is not a lot of stock. And so as we start this new cycle with 31 million shares coming out of the gate around $30 a share, it's a company that I think could be very torquey. And it's a company we've modeled 38 to $50 million of ETF and indice buying on the back of the merger. 9 analysts covering us, inclusion already into GDXJ, SILJ. We've got huge institutional ownership. So yes, it's all about the assets, it's all about the plan, it's all about the cash flow, but there's that intangible about we're in a universe in capital markets where size matters, liquidity matters. We're trading $10 million of stock a day. And how that will enable us to continue to grow the business. We've got a wonderful 20-year plan, but that doesn't mean we can't enhance that plan and get there faster and be bigger if there's opportunities to take advantage of in the next 12 months.
I also thought it was interesting that your shareholder base had very little overlap
yeah,
institutionally.
there's a lot of interesting sort of parallels. Yeah, we don't have any of the same big shareholders. The analyst coverage, there was no overlap in the analyst coverage, so there'll be nine entities now covering the combined Contango silver and gold. Shawn, kind of started with Dolly, I think it was 5, 6 years ago, and same with me with Contango. So we met each other about 10 years ago, and it just kind of stayed in touch and watched what each other's doing here. So it's it was, I don't know if it was inevitable or what, but we're really excited about this combined company and what we can do with it.
So staying on the theme of capital markets, so the combined company is going to be listed on NYSE American and will seek a TSX listing. How meaningful is the dual listing for institutional discovery, valuation lift, and for you guys?
If for me, when I go back to the last time we had a big bull market in metals, I felt like Toronto was the center of the world, right? It's where the world came to get exposure to mining. And I think what's exciting for Contango shareholders is they haven't had that exposure. And there's a lot of funds that I've talked to that have converted, whether they're in Australia, Southeast Asia, throughout Europe, that have come through because the NYSE American for Dolly is a new, we just got listed in April. And so as we built the business from 20 million to $500 million, it's been on the back of Canada. And so I think as we move into a market, we're starting to see it in our Canadian dollar. We're starting to see it in the Canadian equity markets. We're starting to see that strength come back. And so I think it's great. I think, the more index buying and the more institutional exposure, I think it's a positive. But having said all that, the US is the biggest market in the world, right? So I think that is going to be where our largest market, our most liquid market, and where both companies have a big opportunity. Neither company has a huge retail base. Dolly right now, between the two corporates at 25%, Eric at 9, that's 35%, 50% institutional. It leaves like 15% in the hands of the public, 1/5. And so, we've worked on that. We've grown it from 7, 8%. We've doubled it. But I think one of the big opportunities, as I see it, is just getting on the road, getting into the US markets, sharing the value proposition, and positioning the company as the next Hecla. And I think that's going to really resonate globally. But we're starting to see a lot of new funds launch out of Switzerland, out of Southeast Asia, out of the UK. The UK is coming back in a big way. But yeah, I think having the dual listing on the big boards is going to be very beneficial.
I know certain companies like Dakota Gold have pursued just a New York listing and seem convinced that not being on Toronto has a net benefit. Rick, did you find that?
Well, so Contango is only listed in the US. We started as a friends and family company. And it was, not to get into the long story, but it was an oil and gas company that decided to, basically on a whim, get into the gold business. And so it was, we had wealthy Texans and wealthy Alaskans as shareholders. But because Contango Oil and Gas was listed on the New York Stock Exchange, we were pink sheet listed. And so one of the first things I did was get us listed under New York. And it's a great exchange, and there's as Shawn said, it's the biggest market in the world. But I think having the dual listing is the right approach, and there's just Canada's the go-to place for resource stocks. So it's we did not go there because we just didn't start there, and this is a great opportunity for us to get listed in both places. And I think that'll be a net positive.
Got it. And Toronto's open for investors for the first time that I've seen in many years. It's like a year ago, marketing in Toronto was like, put a gun to my head. I'm not going to get a full schedule, but now, you can book a couple days and get generalists involved in some really good funds. So I do feel like Canada has opened up again from an investment perspective. With the merger delivering increased scale and institutional ownership, how are you thinking about your capital structure, like balance between debt, equity, potential strategic royalty financing? Like, how are you thinking about capital allocation?
No royalties, no streams. Just being involved those, look, they're non-dilutive to a degree, but you're giving up a lot of upside to shareholders. And when we think we're exploring in 4 districts. The Tetland property, our joint venture at Mont Show, it's a whole district. We have a private land that's the size of the state of Rhode Island. Albeit as a small state, but it's still a state. That's private land owned by the Tetland tribe. We have the first agreement ever with the tribe for anything, but specifically for mineral development. Lucky Shot's a district. Johnson Track's a district. Kitsalt's a district. Actually, Kitsalt may be a couple of districts. So we've got a huge amount of exploration upside. So no royalties, no streams. That's just not. We don't think that's in shareholders' best interest. As an $800 million market cap company, we're going to have a lot of ability to raise debt if we need to raise debt to develop any of the projects. Right now, with our DSO approach, we really don't see the necessity to do that. We get Lucky Shot into production and add another 70, 80, $100 million of free cash flow as we get that mine up to the 50,000 ounce target, 50,000 ounce of gold annual production target. Now you're generating $200 million a year, and you're dedicating that to advancing Johnson Track, and Kitsault. If we need to raise some debt in there, that's with it, with an $800 million plus market cap, that really won't be a big issue. And again, since we're not talking about raising debt to build a new mill or a tailings facility or a big power plant, the total cost to get Johnson Tract into production is in the neighborhood of $250 million. And part of that is doing the feasibility. Actually, about $50 million of that is doing the feasibility study. So, I think this company is well financed to execute the plan on its plate. We talked about the mill and perhaps buying a mill. That would, we'd have to take a look at how to do that, whether we do that with equity or a combination of debt and equity. But that's sort of in my mind, that's sort of the last piece of the puzzle.
Yeah, and just from my perspective, just as Toronto's kind of opening up again, equity markets in general, I'm seeing unfunded developers in tier 2 and 3 jurisdictions take on debt for like 5% versus we were in a market where the debt markets were asking for credit card interest rates for good miners. And so as a producer, with the type of market cap that we're going to have on a combined basis, for me, it's step one is do the merger, get out and get the revaluation. And then, as Rick said, maybe we'll have the currency to use our shares and equity to go out and acquire the processing facility. But the good news is there are people coming out every day and putting things in front of us that are really attractive, and we're just going to stay disciplined right now. My philosophy when it comes to dilution, I'm more concerned with it's the who than the what. And having Eric Sprott or some of the existing investors support us, we'll listen because they've proven that they've got a long time horizon and they're supportive and they're aligned with what we're trying to do here. So no, I think we're in a good spot. It's nice when you don't need to, and you can. It's a good place to be.
I'm going to weave in an audience question. So they're talking about the convertible debt with a 9% coupon. And can this debt be repaid without penalty, or does the company expect or hope for the convert to get in the money and strengthen its balance sheet and equity?
Yeah, so that's with Queens Road Capital. They're a very supportive shareholder, and we would expect to see that convert.
Another question is, what specific milestones do you use to measure post-merger success? Is it resource growth, cash flow per share, capital intensity, permitting wins? And what's like the 12-month scorecard that investors should expect or that you're keeping for yourselves?
I can start there, and I mean it's kind of all of the above in the sense that we'll have cash flow. One of the things we've been working on is reducing our hedge book, and that's for the most part gone now, but we have a specific strategy on that. I think in terms of milestones here, obviously Shawn's got a lot of he's got 50 drill holes yet to release. The updated MRE at Kitsault, 18,000 meters of drilling underground at Lucky Shot. So the next big milestone there would be the completion of a feasibility study. But I just remind people I call it feasibility light because it's just a mine plan and a transportation plan. Again, no mill, no tailings facility, no big power plant, and not all the headaches that come with permitting and constructing those things. At Johnson Tract, we actually were just added to the Fast 41 dashboard, which means we have a dedicated federal agency, the Permitting Council, who helps coordinate. The federal agencies are involved in our permitting, which is the U.S. Army Corps of Engineers, the National Atmospheric and NOAA, National Atmospheric and Ocean Science, and the Department of Interior. So that actually helps not simplify permitting. It just helps smooth it along and make it happen quicker. And obviously, the Trump administration has been very supportive of mining projects, permitting mining projects, with that are critical metals, and silver was just added to the critical metals list. So we see that as an indication that we're using Fast 41, which was actually passed by the Obama administration to accelerate transportation projects. It was Fix America's safety transportation is what FAST stood for, and it doesn't mean that the project is going to, take shortcuts to get permitted. It means that it's just going to have the coordination effort at the federal level to make sure all the different agencies meet timelines and get the work done that needs to get done. That's by dedicating people to actually do it. So, so milestones at Johnson Tract next year. We expect to get our permit from the state of Alaska to start building the tunnel to go underground, and then we can complete the drilling and the feasibility study, which again is a feasibility light because it's a mine plan and a transportation plan. Meanwhile, we are permitting our access to the coast with on easements that have already been granted by the federal government to access the coast, which is about 15 miles away, to build a road and to build a barge landing facility. So, yeah, again, lots and lots of catalysts, lots of milestones. It's kind of, and you pointed this out, Deborah. It's we're kind of taking advantage of the Lassonde curve by always having things going on that are at different stages of the curve. Permitting is boring. Market does not get excited about the little mini milestones that you achieve going along the permitting track. The milestone when you're permitted that's the milestone, and that takes time. And until you actually get there, the market goes, eyes glaze over, and people go, "That's interesting. You're permitting. Let me know when you're done." So yeah. Anyways, lots going on, and Shawn can talk about Kitsault.
Yeah, look, yeah.
Shawn, before you move on, there's actually two audience questions that were partially answered. So if you don't mind, I'll just address those and then we can hand the mic over to you. So one of them was just talking about permitting at Johnson Tract, which you covered, but the remaining part of the question was, what's the biggest schedule risks? Is it permitting, reclamation, exploration commitments?
At Johnson Tract, I said, it's always permitting. When you're in the permitting process, and it's not really the permitting process that can get derailed, it's lawsuits. And the U.S. is a litigious society, and there are certainly lots of folks out there who don't like mining and don't think we should ever mine, and don't know where they expect to get their cell phone from. But and because we all know where it comes from. It comes from China. We're 30 years behind China, so. Not to get sidetracked on that topic, but I think legal lawsuits are probably the single most significant challenge to meeting timelines, and you just have to deal with them. They're I won't say they're unavoidable, but they're certainly not in our wheelhouse to control. So,
and from my perspective, I've got sort of a 5, 2, and 1 year plan. Right. And year one, I kind of joke, we're the dynamic duo that is Mike Clark and Rick and myself, working together and hitting these key milestones at every different project. We're wanting to meet our production guidance, having high grade continuity with the underground drill program at Lucky Shot, executing on the initial construction and camp upgrades at Johnson Tract. And then in addition to the 43-101 coming at the Dolly project, the Kitsault Valley, that's based on work that has been done, right? But the work that's going to be done in 2026, which across the entire portfolio is about 70,000 meters of drilling. So for me, success is at the end of the year, share price appreciation, the market getting this story, it resonating, continuing to build that shareholder base and brand, but delivering growth through the exploration drill bit and advancing the camp upgrades, the initial construction at JT, having Lucky Shot a year away from its production goals, and then just continued success at our flagship.
Makes sense to me. Rick, going back to what you referenced about your hedging program, I had an audience question. Considering Contango has hedged over 60,000 ounces of gold in 2025 to 2027 at just $2,003 an ounce, is the company considering adding additional hedges at current gold prices?
Yeah, short answer is no.
If
We wouldn't have hedged unless the equity markets just weren't there when we needed to raise the money to build the mine. To go back in history, in order to get the financing, which was our share of the $220 million needed to build the mine was about $70 million. So we took out a loan from ING and Macquarie Bank, line of credit, for up to 70. And in order to do that, we had to hedge a portion of the gold, which was about 124,000 ounces when we did this. So from the start of production, roughly 60% of the ounces produced were scheduled to be delivered into the hedges. And the hedges were done at gold price at the time was about $1,850, and the hedges were put in place at about $2,025. We have now, fast forward, by the end of this year, we'll be down around 40,000 ounces remaining on the hedge book. And we're delivering every ounce we can as quickly as we can into the hedge book. So we see the hedges going away by probably the third quarter of this year with the current plan. We are looking at some opportunities to see if we can do that quicker, but that's right now that would be the plan that we would execute on.
And I just want to add, when you were faced with that challenge a few years back, when you needed that capital for construction, one of the reasons your share price was up 100% this year was you have less than 15 million shares issued. So, the hedge, it is what it is. It's coming off. It's been dealt with and being dealt with. But one of the reasons you've got this great structure and is because of that, right? So there is a trade-off, and so it's good that we're coming to the end of that, and we may be able to accelerate extinguishing that book, and we're looking at some very, very innovative and creative ways to do that. But I think the key is I celebrate the fact that post-transaction, 31 million shares out. It's lean. It's like you described, Rick. It's a rocket ship. So, yeah.
Would you look at puts or some other type of downside protection?
I think, from my side, we think we're at the, I think Shawn mentioned it too. We're in a real bull market. I mean, there is nothing out there that says the gold price is going to go down. We just had the Fed announcement on 25 basis point reduction was well broadcast. I mean, it was not news to anybody. What I think did take a few people by surprise, and I don't think enough people are paying attention to this, but they started QE again, quantitative easing, which is the printing of money. It's only 40 billion, but that's, it's only temporary. We've heard those words before out of the Fed. And it's not just the Fed, it's Europe's doing the same thing, China's doing the same thing, Japan's doing it. The solution to debt seems to be more debt. So, and the alternative to debt and printing money is gold, because gold is money. Silver's similar but different, and I think the real silver story is all about its use in solid state batteries and the energy transition, the transportation transition, the communications transition, AI, all those things require both a lot of gold and a lot of silver. And I don't think that's factored into the market yet at all.
It seems like the market's finally catching up with the silver trade the last couple months, but there's still a big divide to go, I would say. That kind of leads me into another question that I had. So you have two well-established companies with strong brands combining together. Um, so like, how do you brand this? Is it going to be a high-grade silver company with gold exposure, a precious metals cash flow growth hybrid? Like, what's your take on how you want this to be positioned with investors?
The way I would like investors to think of us, and I say this, I've said this a few times, there's not a lot of businesses that have been around for 130 years. Hecla is one of those businesses, and they are, it's a very simple business. It's silver, it's gold, and it's in the U.S. and Canada, and so that's how I want investors to think of this. And the only differentiator for us that makes us a little bit different is we've got high grades. We got high grades, and we're in the north, and we've got this DSO model, which is going to enable us to get projects into production for less money and for quicker. So that I want institutional investors when they think about, what Rick and I are creating here is a must-own name in the space. Good balance sheet. We got a great board of directors. We've got a great board. We've got a great management team. We both are coming with two very solid teams. I could speak to my own team and I'll turn it over to Rick, but I brought a group of scientists into a 100-year-old mining camp, and they have made new discoveries. On the business side, we've made accretive acquisitions. We've seen tremendous growth, and we've done it in a way where we brought in $185 million of equity, but the way we sequenced it, it was on the back of success. So there's never a down round. So the shareholders who got behind us on day one are up about 600% sustained. And so it's been good. It's been very good. So what I like here is you've got exploration managers and vice presidents of exploration who know how to expand, extend, discover. And so I'm very confident when, again, I think investing is all about trust. Do I trust management to make the right decisions? And I'm just saying there's a lot of bench strength. And then, Rick talked about some of the innovative deals and agreements he's made with local communities. There's a lot of similarities with what we've done with the Nishka in BC and some of the creative deals we've done with indigenous groups in Canada at large. And so, I just think it's not only high grade gold, silver, it's very creative and innovative ways to bring projects into production in a way where they're win-win transactions. And I think that's what we've created just in our merger. It's truly a win-win where the Contango shareholders get silver, they get growth. The Dolly shareholders, as you pointed out, Deborah, now we're a producer with cash flow and a good balance sheet. So, Rick, I'll turn it over to you if you want to add anything.
Yeah, I don't think there's a whole lot to add, but I'm really looking forward to melding the two teams. We've got obviously exploration folks. I like it when you get two different teams together and they start having new ideas on things. And I'm looking forward to when we're executing on that. And, you got good people, you've got the money to execute. So now we got to execute. There's lots of work to do, but I'm confident we've got the right people to do it.
One last question on the combined, and since we're running closer to the hour, I might just cherry pick a question for each of you from the list I put together. We covered a lot of them anyway in the combined discussion. So, Shawn, I think you hinted about a 20-year plan, so I probably can guess the answer to this question, but given the quality and development optionality of the combined asset base, does this merger strengthen your ability to pursue a long-term standalone strategy or make you a compelling acquisition target for a senior producer? or do you guys want to continue to build a platform?
I think, for me, we're looking at it through the standalone lens. We want to grow into a multi-billion-dollar company, but I also think that this is going to make us attractive to some of those larger entities. And at the end of the day, Rick and I are here to serve the shareholders. And if a deal comes through that makes us part of even a more compelling opportunity, we'll support that. But it hasn't really been part of our vision, our strategy, our discussions. We're looking at growth standalone. But the thought has crossed my mind that even this platform alone is pretty compelling for some of the senior codes that are out there.
I'll just add that, I'm an exploration geologist by background. We've got 4 significant districts to continue to explore. We're advancing development stage projects and advanced exploration projects that have the horsepower to become a mine, but that's not the end of it. Johnson Track's a beautiful ore body. It's a breccia. It's related to a big porphyry system. We're going to continue to explore that, and who knows what we'll find there. So, Kitsault, it's part of the Golden Triangle. This place has seen a lot of big ounces of gold and silver and other metals. So, the geology is right. And again, when we're exploring four districts, and we've got the dollars to continue to explore, we're not stopping here anytime. I see it as a platform. So it's a platform for growth, and if we find something very, very significant, will definitely be of interest to the senior producers.
Okay. And sticking with the current portfolio, you're not looking to make any additions? And if you were, would you look in Alaska and Golden Triangle, or are there other areas that are appealing?
I'd say, we like the model. We've got a lot of work to do. The first step is to get the shareholder vote in, say, call it end of February, March timeframe. Get the merger actually done, get Contango Silver and Gold out into the market, and I'll say properly valued. But Shawn and I both have some lists that have some other names on it, and we'll certainly be looking for good opportunities.
We did talk quite a bit about Contango, so most of the questions I'd written down have been answered. But there's one that I'm curious about. And Rick, I apologize, I'm fairly new to the story over the last couple of weeks, just researching and watching videos. So you have mentioned additional exploration upside across the 675,000 acres around Manh Choh. Like, what are the key targets, and how much drilling are you planning to do, and what are you hoping to achieve with that program?
So we've had about a $5 million program each year since we've done the joint venture with Kinross. And early, the first couple of years, most of that was focused on truly grassroots exploration, stream sediment sampling, soil sampling, ridge and spur type sampling, to look at new target areas. We've got a number of targets to follow up on, but I'd say the focus has shifted here now to Minex. And part of the reason we weren't doing Minex before is because you're getting the mine up and running, and basically the mining guys just don't want the geologists getting in their way. And so that's why you kind of go to the outskirts and do that early work. Now that they've got everything established and working well at the mine site, we can get in with the drill rigs and start looking sort of in and around the mine for additional ounces. And so, we're having success there. I'll be very surprised if we don't extend the current mine life by a year or two. And then, of course, in these more grassroots areas, that's earlier stage. It's going to take time for those to develop, to see what we find there. But it's very prospective ground. It's private. It's owned by the Tetlin tribe. There's 150 people in the Tetlin tribe. They're receiving a very nice royalty, and they're extremely supportive of continuing that effort. So, yeah, we've had a great working relationship with the Tetlin Tribal Council. All of our projects, Johnson Track is on private land owned by the Alaska Native Corporation, and Shawn mentioned the close working relationship they have there with the Nisga'a at Kitsault. So, very important part of doing business right, and that's a very key part of our the way we like to operate.
Okay. Thanks. And if you don't mind, I do have a couple additional questions for Dolly Varden, just because I feel like we spent a bit more time on Contango being the producing asset. So, Shawn, you continue to demonstrate significant high-grade resource expansion potential at Kitsault. I think you had some of the highest grade intercepts this year. How would you characterize the remaining blue sky upside along strike and at depth across the consolidated land package?
Yeah, no, good question. We had a breakthrough a few years ago where we poked a few holes underneath the sediment cover, and we found that the Jurassic Age Hazelton Formation, this is the suite that hosts some of the big deposits up there, like Bruce Jack and Eskay and Premier. And so what that opened up, though, is that sediment cover starting around the Wolf Vein, heading 5.5 kilometers north to Homestake Silver, um, opened up a new opportunity. And Rick is describing the deposits that are controlled on the Kitsault trend as pearls on a string, right? And so the blue sky is the question that I have that I'm looking to answer is how many of these 50 million ounce pearls are we going to uncover? Now, we've got one in Torbrit. Torbrit was Canada's third largest primary producer. It produced for 10 years uninterrupted at 0.5 kilo per ton. And we've got about 35 million ounces in a compliant resource that's looking to grow. And then a mile away, you've got the Wolf, which is where we're going to see the big growth. But there's other deposits like Moose and Chance, Ace Galena, North Star, the Dolly Varden. So we've got a number of these deposits they're really unique in the Golden Triangle, because in the Golden Triangle you've got the big copper mines in the north like Red Chris, and then in the middle you've got the big gold deposits like Bruce Jack, and then as you go south down to Premier, Red Mountain, our own Homestake, which is a gold-rich deposit, million ounces. Then as you go further south, you get into silver gold, and then it goes completely silver dominant. So, look, right now we've got 64 million ounces. I think the next resource estimate is going to take us to 100. Do I think there's potential for 250 million ounces in that southern end? I do. And so there's a lot of potential, a lot of blue sky. We're open in all directions. When I first came into Dolly, one of the things that compelled me to come here was where I cut my teeth was on a project that was in production in the middle of Canada, 60 miles west of Red Lake. And Deborah, we were down a mile below surface. We were producing 5,600 feet below the surface. When I came across Dolly Varden, it had never been drilled below 300 meters. And it was all open. So it was open along strike, it was open at depth. And so and what's interesting is I don't think it's a coincidence that every year we say, and that was the best drill hole the project's ever seen. And that was like, so as we follow these deposits along plunge, they're intensifying. The Wolf Vein was the discovery hole was 1,500 grams of silver over a meter or two. Like, I wasn't that excited about it, to be honest with you, but I didn't really understand, in the context of where it was below the sediments, what the implications were. But I got really excited over, 1,400 grams over 20 meters, like a 30,000 gram meter hit. And so we're consistently finding wide, high grade. And what I like to do is I like to take the high grade out of the assay. So we had a meter at 10,000 grams, took it right out, it's still running 973 grams over 21 meters. So tons of blue sky, tons of opportunity. But at some point, you need to say, let's start looking at this through a development lens, particularly when you've got, in the case of Torbert, you got a road that goes from Tidewater. There's power coming into the Kitsault site. It's a permitted site. You're on Tidewater. You got a road that takes you right up to the deposit. There's a few upgrades that need to be done, but we've got the permit in hand to make those upgrades. And there's 7 kilometers of underground workings that, this was a mine. There's a big endowment still there. Yes, we're finding more, but it's time now to start looking at a bulk sample and start looking at, and I didn't have that skill set. Rick's team and Rick and his team do. And so this is why, in addition to all the other things that we talked about today, we want to continue to grow, but we also want to start looking at development and production.
That makes sense. Um, I think you've answered kind of three of my questions in that one question, but I guess um, you talked about what targets you think are materially going to grow the resource base. Maybe you can point us to sort of milestones, catalysts, what investors should be looking to track to measure that success.
Yeah, I think I like to look at these from the standpoint of risk, right? So 4 years ago, we bought Homestake, and the risk was we bought a inferred resource. And the risk was we were going to go out and infill it, and it wasn't going to hold together. And what's so success to me is when we put out this new resource estimate, what is the continuity? What is the grade? Are we converting? Are the surprises going to be to the upside or the downside? So I think success for me at Homestake would be conversion and grade improvement. And that'll, even if the tons remain the same, that'll be an increase in ounces if the grade goes up. So that's success to me at Homestake. Success to me is incorporate. The toughest thing to do in our business is discovery. And it's the most cost-effective way to add value to your shareholders. Acquisitions sometimes are expensive. And for us, if we've got a vein that's getting more intense, richer, wider as we chase it, incorporating the initial kilometer strike length in a compliant estimate is a good starting point, but it's by no means, telling you that this thing is still open. So success, Homestake conversion, inclusion of the Wolf vein. We picked up a lot of ground this year. We went from 15,000 hectares to 100. So on some of this new ground that we went out and did some prospecting, what are we finding? Are we seeing similar styles of mineralization? Are we seeing some good grades come in through assays? And, those will make up some of the big targets and opportunities in 26.
I think I've asked the questions that I wanted to ask. Were there any parts of either company or the combined entity that you wanted to discuss that I didn't hit on? Is there anything critical that we've missed?
I mean, Deborah, I think you've asked a lot of great questions that have, we've got to talk both about the merge co and about the individual companies on their own. I continue to believe this is a great combination, a truly synergistic combination, and a one plus one is three, or as Shawn likes to say, 11.
Yeah, yeah.
So yeah, we're excited. We're heading into the holidays here, but we've got a lot of work to do come next year, and we'll get our proxy statement out here shortly, and SEC's got to review it, but shareholders should be in shareholders' hands in early in January sometime, and get the vote done, and then just keep moving forward.
Awesome. Well, thank you both for your time. Congratulations on the merger. It's really exciting. It's been interesting to get to know your story, Rick and Shawn. Nice getting an update, and yeah, really looking forward to seeing the combined entity and how you trade and how you grow. Yeah, thanks. I appreciate you supporting our charity cause, and thanks to the audience for participating and for your questions. If anyone has any additional questions or wants a call, feel free to reach out and I can arrange that for you. And happy holidays.
Thank you.
Thanks so much. Yeah, happy holidays.